JFD, just fair and direct.
Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Let me just quickly load this up. So yeah, do apologize for the kind of wait, but there we go. So this is a little research tab right there, and like I said, if you click on it, it'll take you to this page which we update on a daily basis. So I believe you can find it useful. Now jumping into this chart here, or graph, or basically let's see what's happening here globally. Now, of course, the figure continues to rise, unfortunately, but it is the kind of the current reality. Yesterday we had a surge, another surge of total infections, but it didn't quite really reach the previous, let's say, record, but it came close. The most important that it was more than 200,000, and yep, so yep, that's unfortunately is a very bad number. So yeah, guys, I mean, for now, all this picture is not really looking good. The market is kind of balancing between that good data and bad data, and and basically it's affecting the market as well. I mean, some investors are afraid that new lockdown measures will get implemented again. So of course, let's wait and see. Let's not over speculate on this too much. Let's see if we actually do get another lockdown later on in this year. Some reports and some words on the street already are saying that yeah, something like that could be. If it is like that, and if it's going to happen again, then of course the big question here will be how drastic will it be? I mean, how tough and how strict will it be, and will it be the same as previous, or actually a little bit more relaxed? But of course, like I said, let's wait and see. But for now, we're just taking every bit of information from surrounding the coronavirus on a daily basis, and yep, and this kind of because this is kind of having a short-term effect at the moment, short-term effect on each single day. Because, for example, looking at the Shanghai Composite here, you can see that the index reversed sharply to the downside. I mean, amid concerns of increasing kind of infection cases. So and as I said, yesterday we had another surge. So yep, the market here, the Asian market, kind of reflected that that kind of picture. Previously, when I was talking about the Shanghai Composite in the beginning of this week, I was telling you guys to keep a close eye on this high of last week near the 3,457 territory, which, as you can see, the index failed to overcome and drifted lower. Don't get me wrong, the index is still open. I mean, we still have another around 53 minutes left of trading in this index. So let's see where it's going to end. But for now, not everything is looking quite good. And the idea that I've mentioned at the beginning of this week was that if we see a drop below the 3,288 territory, then, well, I mean, and that's, by the way, the highest point of 2019, then we may get a bit of a larger correction to the downside. And the reason why I'm saying that it's correction, because still we're trading above this short-term upside support line taken from the low the 19th of March. So in other words, if this candle, this daily candle, stays below this 3,288 territory, then initially we'll target this 21-day EMA, but a slightly better level for us could be around here near the 3,127 zone, approximately around here, marked by the highest point of January 2020. And here we will see if this area can provide a bit of support. If it cannot, then yes, of course, further declines are possible, but kind of last resort for the bulls to step in could be near this upside support line. So again, for now, all eyes are on this little level, on the highest point of 2019, near the 3,288 territory. If we do get a nice daily close below it, then yep, this is where a few more bears could get excited. In case this, let's say, ends the day above the 3,288 zone, if it stays, for example, in this little area right here, between the 3,288 and 3,336 territory, then this could be somewhat of a neutral one for us. If it climbs back above the 3,336 territory, there is a chance to see this one reversing to the upside, but as you probably already know, ideally, preferably, the more careful approach here could be if we get a break above the high of last week near the 3,457 territory here, because such a move would confirm a forthcoming higher high. So, but again, for now, we are leaning a little bit to the downside, but again, let's wait for that confirmation daily close below this 3,288 territory. Now, jumping into the German DAX here, the picture is, well, it was positive yesterday, and it could still be seen as a positive, because yesterday what I was saying that if we get a nice daily close above this 12,913 territory, which is the highest point of June, then yes, higher levels could be met. We could see this one pushing further north. However, if we look at the cash index right now, the price has moved back below this 12,900 in 13 territory, but it remains above this high of last week. So in a way, there is still a chance for the buyers kind of to step in here and push this back up. However, of course, ideally we would prefer to wait for a push above the high of June again, and then yes, to get a little bit more comfortable with those higher levels. So again, basically for now, guys, long story short, yes, the fact that yesterday it managed to climb above this above the June high, that's a positive, that's great news. However, the fact that the cash index right now has declined and is trading slightly below that barrier, that kind of makes us a little bit concerned. But still there is a possibility to see this one pushing higher. However, if it starts dropping back below the 12,842 territory, or even if you want to be a little bit more safer, if it drops below the yesterday's low near the 12,773 territory, then we might consider a bit of a decline here towards this upside support line taken from the low of the 19th of March. So keep your eyes on that one. Now, jumping into the FTSE 100. So here the FTSE is looking quite a little bit better, I would say, maybe, but still stuck below this key resistance level, these two key resistance levels that I mentioned previously. So the 6,304 territory and the 6,342 level, marked by the high of the 23rd of June here. So what I was saying previously, that we need to see it pop above this 6,342 level in order to kind of aim for some higher levels. And those higher levels could be just near the highest point of June first. That's going to be our first target, near the 6,512 zone, and which also kind of almost coincides with the 200-day EMA here. So basically a very good potential area of resistance. So if we do see a push of the 6,342 territory, then that's the level that we're going to be aiming for, the highest point of June and this 200-day EMA. If we look at the cash index and where it's trading at right now, it is currently balancing near the 6,275 mark. So basically just slightly below the yesterday's close, however not far from these two barriers here. So we'll still remain somewhat positive, and the fact that kind of the pound has retraced a little bit, this kind of gives a bit of hope that the FTSE 100 could make its way a little bit higher. But as I said, preferably a push above the preferably we would wait for a push above the 6,342 level first before kind of, let's say, aiming for some higher levels. In terms of the downside, we would need to see a drop at least below the 6,029 zone before, let's say, considering slightly lower areas. Now, jumping into gold. Now gold is very, very tricky, and yesterday I was talking about gold, and I was telling you guys to keep a close eye on the high of last week near the 1818 level, which, as you can see, yesterday, for example, the commodity came close to testing that area, but it failed to do so and kind of drifted back down and closed fractionally unchanged, or literally virtually unchanged, I would say. It's still, but the positive side is that it still remained above this upside support line taken from the low of the 5th of June. So in a way, there is still a chance. There is still a chance for the bulls to push this one higher. However, I'll stick to the same idea. The 1818 level, that's what we'd like to see a break off first before aiming for some higher levels. For now, today, this morning, you can see that the commodities again is testing this upside line, and it's showing willingness to kind of move lower. Let's see if it does that, and if it does, the same question again will be valid. Will it close the daily candle below it? Because, for example, here on the 14th of July, the pair drifted lower heavily, but as you can see, by the end of the day, it kind of quickly reversed and closed the day back above this upside line. So similar question arises today as well. If it does drift lower, will the daily candle stay below this upside line? If it does, then, well, this is where we could maybe start considering some slightly lower levels. Now, DXY, very quickly on this one here, the index, the dollar index, it has drifted lower. Yesterday I talked about this one, and I was telling you guys to keep a close eye on the lowest point of June near the 95.72 territory, which, as you can see, kind of continues to provide support from where you can see that the index kind of is reversing to the upside. Seems that it's willing to move higher, but of course, for now we will be very careful here. In order to aim for some lower levels, ideally a drop below this area here would be needed, because here what could happen here, if let's say if this 95.72 territory continues to provide support, then we may see a bit of a rebound here, maybe a push back towards this downside line, and basically all this territory could still remain a bit of a tricky one. For us to, let's say, aim for some higher levels, we would ideally like to see a break of this downside line and push above the 97.74 territory before kind of, let's say, aiming for some upside. But again, for now, we are closer to this key support level. Let's see if it can continue to hold. If it cannot, then, well, a break of it would confirm a forthcoming lower low, and the next target could be the lowest point of March, or the current lowest point of 2020. Quick update on Ethereum. To be honest, not much happening here, but just wanted to quickly update you on this. So still, we're trading above this short-term, or sorry, medium-term upside support line, tentative one, of course, but nevertheless an upside support line, and as long as it stays above it, then yep, we could in a way continue aiming for some higher levels. However, to get excited and more comfortable with the upside, preferably a push above the 253.50 zone would be needed. That's the highest point of June. Now jumping into a few pairs, AUD/JPY, I have looked at this one recently, and I was telling you guys to keep a close eye on this little barrier here, the 75.16 zone, which, as you can see, continues to provide decent resistance. And in a way, for now, basically, what we're going to do here is we'll keep an eye on this resistance level, because we need to see a nice good break above it, and ideally a daily close above it, because, for example, yesterday we did have a break, but we didn't get a nice daily candle. Well, we didn't get the daily candle staying above it, so this kind of raises concerns a little bit about the upside, but still we're not gonna, or should I say, the bulls are not really getting disappointed here yet, because the rate is still balancing above the short-term upside support line taken from the lowest point of April. So as long as this upside line stays intact, and we do see a nice good strong move above the 75.16 level, then yes, we will remain positive, at least with the near-term outlook, where the next potential target could be the highest point of June near the 76.79 level. A break of this upside line and a drop below the low of last week here near the 73.99 zone could in a way open the door towards slightly lower levels. Now NZD USD, I just wanted to quickly update you on this one. Basically, we are near this key resistance barrier here near the 0.6580 zone, so we need to see a nice good at least daily close above this, because as you can see we keep getting these overshoots, but neither of the daily candle is kind of staying above this barrier. So we need to see at least a nice good daily candle kind of ending above this 0.6580 territory before kind of considering higher levels. We're very close to kind of moving higher, but still, as you can see, the bulls are struggling to kind of keep the rate above this barrier. So we'll keep an eye on this one. Like I said, very interesting developments here. Could be quite an interesting trade, but like I said, wait for that confirmation break. USD CAD, now here the pair has shifted heavily to the downside yesterday, as you can see, but remained above this barrier, above this 1.3488 territory, the one that I kept talking about this week. And basically for now, even though it did show a strong move lower, we still cannot really talk about the downside yet, because we might be getting the same scenario as we had here on the 8th of July, for example, where also the pair reversed sharply to the downside. It seemed that it wants to drift below this 1.3488 territory, but then in the next kind of 4 days it started moving higher. So that's why for now basically we'll keep an eye on this little range, and the one that I mentioned between the 1.3488 and the 1.3624 levels. We need to see a clear breakthrough one of those before we could consider the next kind of short-term directional move, because again, with the upside it's also a little bit tricky here. Even if we do see a push above this 1.3624 level, yes, we may see some higher levels being met, but we'll be very careful near this downside line, because again, if it stays intact, then we could see another round of selling. But the fact that it's closer right now to the lower side of the range near this near this 1.3488 level, of course we're keeping an eye on it today, because if it gets broken, then well, this is where the excitement in the eyes of the bears could spark, and we could see a move towards the lowest point of June near the 1.3314 level. Now jumping into GBP NZD very quickly here, so the pair, I talked about this one yesterday, and I was telling you guys to keep a close eye on this barrier, the 1.9209, which, as you can see, continues to provide resistance. So even yesterday we had another false breakout above it, but still the daily candle was not able to kind of stay above it. So basically this level here is quite an interesting one, the 1.9209. The pair is struggling to overcome it, and today we're seeing kind of a move lower here, but still we are still above this 1.9115 mark right here, which is, by the way, let me just go back into history, which is the low of the 12th of September 2019. So what you could do here is, of course, keep your eyes on it. If it gets broken, then yep, if it gets broken, then we may see a further push lower towards the current lowest point of July, and near the, let me just probably grab one of these lines here. Let me just recycle it. Well, actually, no, I'll get rid of this just to not to overcrowd the chart. Yep, the lowest point of July could be somewhere around here near the 1.9022 level. So that's going to be our target if we get a drop below the 1.9115 level. Now, quick update on euro dollar against the Singapore dollar. I've talked about this one yesterday in my morning video, and basically I was telling you guys to keep a close eye on this barrier here, because we're very close to kind of moving above it, and we this morning, and again, we had another push above that barrier. That's, by the way, the highest point of June, and right now you can see that the pair is kind of floating near this area. Let's see if we can get a daily candle close, a daily candle kind of staying above this barrier. If we can see something like that, then yes, the next target for us could be the highest point of March, near the 1.5970. So again, like I said, just wanted to kind of show you and quickly update you on this, because it's quite interesting. And as we know, the Singapore dollar lately has become a somewhat of an indication of the whole situation surrounding the coronavirus, and basically whenever it's getting weaker, that means that well, the coronavirus, it seems like the coronavirus situation is getting worse. So and that's exactly what happened, for example, in the beginning of this year as well. As we know, that Singapore is basically heavily dependent on China, on trade with China. So that's why this currency tends to fluctuate, or should I say, depreciate heavily when there is a problem, some sort of problem with, or actually it could be a problem with supplies from China. Now, jumping into another pair, Euro GBP here, the pair kind of, well, this week it popped above this upside support line again, taken from the low of the 18th of February. It seemed that yes, it wanted to move higher, but as you can see, this level here, I've mentioned this one previously, the 0.9079 territory, kind of acted as a very nice area of resistance. So it did have a nice pop on Tuesday. Yesterday, the pair didn't attempt to move higher, but failed to do so and drifted back down, but remained above this upside support line, so which could be seen as a nice positive thing here for the buyers. Today, this morning, we're having a nice rebound from this upside line, and already a push above the 0.9079 level. So let's see if we can continue if the pair can continue making its way above it. If it can, then of course, yes, we are leaning a little bit more to the upside here. Again, the 0.9150 level could be the next target, or a break of it may open the door towards the high of the 26th of March near the 0.9239 level. So keep your eyes on that one, guys. And finally, Euro USD. Here the pair is well, look, it's kind of declining today. This morning we're seeing that, but it still remains above this upside support line taken from the low, the 14th of May. So in a way, even if it drifts lower here, still there is a chance for the bulls to step in somewhere around here and push this one higher. However, don't get me wrong, it might drift a little bit lower here, but still the kind of the outlook remains somewhat positive. Of course, the fact that it kind of failed to close the daily candle above the highest point of June yesterday, that's a little bit kind of say disappointing. This level, by the way, is near the 1.1422 zone, yep, it kind of failed to close. It did have an overshoot, but failed to stay above it. So now we're seeing this kind of little correction lower. Like I said, it may correct a little bit lower here, but if it continues to trade above this upside support line, then there is still a chance for the bulls to push this one higher. If you're more on the cautious side, wait for another break above the 1.1422 zone, and then we could aim for the current highest point of this year near the 1.1496 level. And in terms of the downside, well, previously I talked about this 1.1168 territory. Now basically we can shift this a little bit, and we can basically have a look at some of these other levels, like for example maybe the low of Tuesday, or Let me just quickly pick up on this. Actually, the low probably will pick up on the low of this week near the 1.1296 zone, and a nice big drop below it, of course, would also place the rate below the subside line and also below the 21-day EMA, which recently kind of acted as a very nice area of support. So that's why a drop below this area could be seen as somewhat of a more bearish one. So guys, I really hope you found it useful, and thank you very much for joining in and watching this till the end. I really appreciate your time. I hope you found it useful. So I hope you stay safe today, guys. Stay safe both health-wise and market-wise. And let's catch up later on. My trader's tea time around 13:15 GMT. I'll have a look at some of these instruments just to see how everything's kind of getting along, and we'll take it from there. But hopefully this day is going to be an exciting one for you, and stay safe, guys. Like I said, both health-wise and market-wise. Have a wonderful trading day. Bye bye.